Welcome to the Stock Market Daily News podcast for Thursday, January 16th, 2026. I'm your host, and here's your 2-minute rundown of everything that moved the markets yesterday. Let's start with a quick look at the major indexes. The S&P 500 slipped just under 0.5%, closing at 4,815. The Dow Jones edged lower by 0.33%, ending the day at 37,650. The Nasdaq, weighed down by tech and crypto names, lost about 0.2% and settled at 15,110. The biggest talk on Wall Street was the continued fallout from crypto's slump, dragging down some well-known names and sparking debate on regulation and market strategy. We'll break down what this means for investors, and we'll look at a new bipartisan push in Congress to ban lawmakers from trading stocks, plus shifting trends in global investment, especially in India. Let's dive in. First, the latest crypto downturn hammered Cathie Wood's ARK ETFs. Coinbase shares plunged 35% in the fourth quarter, falling from $346 in October to just $226 by year-end. That drop outpaced even Bitcoin, which lost 22% in the same period. As Coinbase is the top crypto holding for ARK, its declines were a major drag, especially on the ARK Innovation ETF and ARK's blockchain funds. Despite a recent upgrade from Bank of America calling Coinbase an everything exchange, investors remain wary as trading volumes drop. For anyone exposed to crypto-linked equities, heightened volatility and sensitivity to digital asset sentiment remains a key risk theme. In Congress, a bipartisan group of senators just introduced the Restore Trust in Congress Act, which would ban lawmakers and their families from trading stocks. If passed, current members would have 6 months to divest, and new members would have 90 days. The bill carves out exceptions for broad funds and government bonds, but aims to stamp out the appearance of insider trading. With over 80% of Americans supporting such a ban, watch for renewed policy debate. This could reshape how politicians participate in the market and may even affect how some stocks with concentrated political ownership trade. Turning overseas, foreign investment flows in Indian equities have shifted dramatically. U.S.-based investors now hold 44% of India-focused foreign portfolio assets, up from 34% a decade ago. European funds are also gaining ground, while traditional tax haven routes through Mauritius have plunged from 21% to just over 4% share. Tighter Indian tax laws and global disclosure rules are driving this change. For investors in emerging markets, it's a reminder that regulation and capital flow dynamics can reshape entire sectors. Meanwhile, beyond crypto prices, Bitcoin analysts are focusing on what's moving the market under the surface. ETF flows are now a key gauge of institutional demand, and reversals can spark sudden price swings. Ongoing questions about how Bitcoin miners get paid, scaling debates, and U.S. regulatory shifts are shaping sentiment, even with prices subdued. For portfolio managers, it's a time to be nimble and watch both the pipes of market structure and the policy mood. To close things out, here's a quick recap. The S&P 500 closed down to 4,815, Dow Jones at 37,650, and Nasdaq at 15,110. Crypto-linked stocks faced outsized losses, regulatory debates are heating up in D.C., and global capital is finding new routes. Look ahead for key earnings in the next few days, plus updates from the Fed and fresh economic data to guide this quarter's outlook. Thanks for tuning in to Stock Market Daily News. Subscribe for more, follow us for daily updates, and stay ahead in the markets.